a panel set up for you today to be able to review some of the key issues when it comes to banking cannabis-related businesses. So let me introduce you to our panelists today. We have Robin Schneider. She's joining us as the Executive Director of the Michigan Cannabis Industry Association. She's going to share with us today some of the important things that are happening on the industry side and what's important for us to know as bankers as we look at considering these customers when we think about the customer perspective. We have John Geringer from Barrick Verrazzano. Did I say it right, John? John Geringer is a partner there, former bank regulator, and brings a ton of experience to his bank clients when it comes to banking high-risk industries. And so we're lucky to have him with us today to share a legal overview, some of the broader considerations for bankers looking to get into this space. And then we have Deirdre Gorman with us. She is the CEO of two companies, Imperial Logistics and DX Consulting, both of which work in the cannabis banking space, working with a number of banks in Michigan today. So she brings great experience, not only what's happening across the country, but on the ground in Michigan in terms of operationalizing your cannabis banking programs. I thought for today it would be great to start off with Robin and have her share with us some of the important things that are happening on the industry side as we continue to see an expanding recreational market there. It's really great to hear from her on what challenges the industry is facing and some of the upcoming opportunities, all of which potentially means more business for all of us as bankers. Just a reminder again, if you have questions, we've got the Q&A box on the toolbar that is available from Zoom. We'll be having a panel with all of our speakers towards the end of our presentations today, and we'll incorporate your questions into that conversation. So please don't hesitate to throw those out there. So Robin, with that, I will pass it over to you.
Thank you. All right. Well, I'm Robin Schneider. I'm the Executive Director of the Michigan Cannabis Industry Association, and we are Michigan's largest cannabis-related trade association. We represent all of the available license types, growers, processors, provisioning centers, which is retail, as well as transporters and testing laboratories. And we have about 260 members and growing. And the association, with the passage of adult use cannabis in Michigan, our association grew very quickly. And one of the first things that we saw as a barrier for our members was access to transparent banking. So I'm going to jump right into some of our slides to just demonstrate how well this industry is doing and will continue to do. I know we've seen articles recently that cannabis is pandemic proof, which proved to be true. And so we started adult use sales in December of 2019 with just about 7 million in total sales. And as we see over the next 8 months, those sales rose all the way to just under 60 million a month in last month in revenue. So we are seeing very strong sales. In fact, we had a couple jumps in there during the stay-home order. And one of the things that I noticed during that time was that a lot of people were staying home and maybe day drinking a little too much, stressed out, having anxiety. And I had a lot of moms calling me and saying, where can I get some gummies? I'm drinking too much. This is getting unhealthy for me. So we actually saw a shift of people who didn't use cannabis using low dose, edibles to help take some of that anxiety off. And the feedback we got was that it was actually a health choice for them. So we did see a little bit of a jump there, as you can see reflected on the graph, but we are having continued growth and our sales have not been affected this year at all. If you want to go ahead and move to the next slide. And then we're just going to take a look at the licenses that were approved for establishments under recreational only. This doesn't include medical. And as we saw in December of 2019, we had 31 approved. And then in March, we had 51 licenses approved. And as we see in April, we actually had a little decrease, and that was at the time of the stay-home order when construction was halted temporarily. And even though we were declared essential in the state of Michigan, a lot of our construction projects stopped during that initial period, and then over, towards the end of May and June started getting back on track. And as you can see, by July, we were up to 61 licenses again. And so we that is reflected in what happened with the pandemic. And
Hey, Robin, we lost you there for a minute. Do you want to start at the top of this slide? Hey, John, while Robin works on her internet connection, do you mind if I switch over to you and we'll come back to Robin at the end of your presentation?
Not at all.
Okay. And Stephanie, if you can watch the attendee, she came in as an attendee before, you'll have to promote her to a panelist. Thank you.
Will do.
And so, John, I'll pass it over to you for some legal considerations that bankers who have not yet entered cannabis banking, some of the things that they need to be thinking about as they talk as a management team and their boards. And so appreciate your overview.
Yeah, I'd be happy to. Good afternoon, everybody. It's really a pleasure to be here. Usually this time of year, I find myself in harbor country, so I enjoy helping the Michigan economy by going to oinks and related places. So it's a pleasure to be here virtually, and I look forward to coming back in person one of these days. And if I look like I'm actually smoking the stuff we're talking about, I've got Bell's palsy, which has frozen half my face. So please bear with me. This should go away soon, but for now, I can't blink my left eye, so if it looks like I'm tearing up, it's not because I'm so engaged in this sphere. It's just my left eye doesn't blink. So anyway, yeah, we represent about 250 clients around the country, teeny ones, big ones, and we've been talking, as you can imagine, to a lot of them about marijuana, cannabis, hemp, and all these related issues. And so what we usually have to start with, of course, is the obvious, which is, let's see if we can get the slide deck to move. You'll bear with the technology, please. There we go. You all know this already, right? Marijuana is illegal. And before a bank decides to move forward with respect to the decisions around whether or not to bank marijuana, you have to get over that hump. You have to get over knowing that it is illegal on the federal side. And we're getting the slides to work here. But in the meantime, what has happened is slow erosion on the federal side as the states have become the laboratory of democracies that they usually are. And by that, there's been an act that's passed with every budget amendment called the Rohrabacher-Farr Amendment, sometimes labeled other things, that's basically defunded the ability of the Justice Department to enforce marijuana laws on the medical side in states where those are legal. Tony, can you help me out here and maybe move the slide back a couple? Maybe I'll have you run the slide deck.
Sure.
Thank you. Back to that first one. And while we're on it, and I'm sure you're aware of legislation that has been passing in Congress, or at least weeding its way through, no pun, its way through Congress relative to different elements of marijuana. You have the States Act, which is probably the only bipartisan thing, I'm sorry, the Safe Banking Act, which is probably the only bipartisan thing that's happened in Washington the last few months. It passed out of the House 321 to 103. And basically what it said is, although we're going to keep marijuana illegal on the federal side, that to the extent that you have the banking industry the insurance industry, other elements of the financial industry dealing with them, that we will allow that and we will not go after them criminally. The States Act would basically say that states are these democratically isolated places where they can decide to make it legal, and the federal law, in effect, won't apply to them. And then you have the MORE Act, which you may have seen is coming up in the House later this month, probably, which basically says we're going to make marijuana legal. Those who've been incarcerated will be let out to certain degrees, and others that are weeding their way through Congress. And so if we turn to the next slide, we mentioned that marijuana is a dangerous drug, which is Schedule I, which basically means no medical benefits and highly addictive. Tony, if you could move up one, please. And what you'll see in this next slide, hopefully, is that the DEA has a series of schedules. Schedule I includes marijuana. Schedule II includes cocaine. So basically, we have this interesting phenomenon where marijuana is actually one schedule above cocaine. And so, you know, we can all talk about the science of that here. It's the same level as heroin, LSD, and ecstasy. I assume from what all have you read, the science doesn't really seem to support that it should belong to Schedule I, and that's part of what's being revisited. Next slide, please. With respect to hemp on the federal side, there's been deregulation in 2014 in the 2014 Farm Bill, which basically said that we're going to allow for certain experimentation regarding hemp, which is the element of cannabis that is below 0.3% THC. That's the threshold at which something is hemp versus marijuana. And so in 2018, the Farm Bill basically said, okay, now we're going to leave it up to the states. We are going, if states want to have a legal program, they've got to coordinate with the federal government. They've got to take steps to ensure that the crop doesn't grow hot, so to speak, doesn't go above that 0.3%. And various states have coordinated with the USDA, including Michigan, Illinois, others, to provide for cultivation, processing, et cetera, of hemp, or otherwise known as industrial hemp. Next slide, please. You'll have to excuse the gremlins in the system today.
John, are you not seeing the next slide?
I am not. But you know, we can. The good news is we can try to do it from here. And I'm looking at the slide right now that says state marijuana laws, where there are 33 states, and DC have legalized medical, 11 states and DC have legalized recreational, and 15 states have decriminalized entirely. So now I'm on the slide that says we're going into the DOJ marijuana guidance and the Cole Memo. You may have heard about this thing called the Cole Memo. It's basically a memorandum that was established by a guy named James Cole, who was the Deputy Attorney General at the time, before Rod Rosenstein became so famous. He was the DAG at the time. And what he basically said is, you know, the Justice Department has plenty of things to worry about. Marijuana is dangerous and it's illegal, but we acknowledge the state initiatives, and so we're going to focus our DOJ enforcement on certain priorities. And now we're going to go to the slide that says Cole Memo priorities. And what they basically said is, we probably won't prosecute you so long as you stay away from certain things. And those things are distribution to minors, revenue to criminals, diversion on states where it's legal, trafficking other illegal drugs, related violence and the use of firearms, drugged driving, not drunk driving, but drug driving, growing on public lands, and possession on use on federal property. 2 slides more, there we go. Next slide, please. We're gonna go to one called Cole Memo Repeal. And when Attorney General Jeff Sessions came into office, remember, he was the one who said good people don't smoke marijuana. And so he repealed this Cole Memo. The memo was not a regulation, was not a statute, so he could just repeal it as he saw fit. And so he repealed it and basically said, you know what, we won't tell you, the public, how we're going to treat marijuana. It's not going to be anything special or different than the rest of our priorities. you know, we've got terrorism here in Chicago, we have political corruption, we've got all these issues, and so we're not going to make marijuana special. We're going to say that DOJ is going to follow well-established principles. And what happened, unfortunately, at the time is all those people who had been relying on the Cole Memo between 2013 and 14, there were actually 2 of them, and 2018, scared a lot of people, scared a lot of banks who were involved in banking marijuana, thinking that the Department of Justice was now going to come after them, that the helicopters would start landing on their front yards and come after them. And really nothing wound up happening with respect to those states where it was legal. And then if you go to the next slide, you see Attorney General Barr at his congressional hearing to be appointed, basically, in effect, softly brought back the Cole Memo. He said, you know what, notwithstanding the fact that Sessions repealed the Cole Memo, I'm going to softly snap it back because so many people over these years have relied upon it. And so the guidance continues to be a soft version of the Cole Memo saying DOJ probably won't prosecute you so long as you stay away from those certain things. And we'll see in a second why that's important for bankers to know this. Next slide, please. 2 slides more. We're going to talk about general risks associated with new activities. And so now that we've talked about the federal law elements of this and how the states have diverged from that, when we talk to any of our banks about new products and new services, particularly riskier ones, for example, if they want to engage with money service businesses or payday lenders or other riskier activities, we make them go through a process. You know, we make them think about what are the general risks associated with new activities. And, you know, you may hear a lot of people say that the risks have to do with BSA, AML. And that's certainly the case. But it's also true that there are many different risks that bankers need to be aware of on the strategic side. So, for example, if you stubbed your toe banking marijuana and you get an enforcement against you, you know, you're put in the penalty box for M&A. Reputational risk. You may have some of your community that would very much respect the bank for engaging with marijuana-related businesses, or in some cases may choose to leave the bank if engaged in marijuana-related businesses. And only you and your board know what the appetite would be in your community. There are credit risk if you engage in lending. You know, it is not just safety and soundness, it is safety and soundness combined with a higher risk type of potential borrower, riskier collateral and the like. So if you're engaging in credit with respect to marijuana related businesses, that's a whole new level of risk of which you need to be aware. There are operational issues, there are compliance issues, and even liquidity issues. So for example, regulators would likely deem marijuana-related business customer accounts to be flighty capital. Flighty deposits that would leave a bank, you know, if the law changed or if they could go to another bank that gave them a better deal. So you have to be careful about whether they would be deemed to be volatile deposits and somehow, we're going to continue the jokes, bake that into your liquidity analysis. Next slide, please. And while we're changing the slide, we talked about general, you know, new activity risk management practices. No matter what kind of bank you are, state chartered, nationally or federally chartered, federal savings banks, you know, you have to do the same blocking and tackling with respect to this in terms of diligence and approvals, policies, controls, change management. You know, do you have the right people with the right skills who understand the higher risk, the enhanced due diligence elements of banking cannabis related businesses? How are you monitoring and performing it? What do you do with third-party relationships? Because you're going to be dealing with new third parties that you're going to need to do potential vendor risk analysis on them. So it's really getting back to all those things and also some of the practical issues. Are you talking to your correspondent bank about whether or not they would allow you to do it as a downstream bank? Are you working with your D&O insurance carrier? What are you doing operationally at the bank? Are you keeping all the cash in one place? Are you deciding what your new account agreements look like? How are you, depending on what you want to do on marijuana, there's obviously different pivot points. You could have it be only hemp and only marijuana and only cannabis and, you know, different, or only lending or only deposits. You've got to pick what your sweet spot is in terms of risk. and then manage your operations accordingly. So let's assume you've got over that hump. You're fine with it. Your correspondent banker is fine with it. Your regulators, you talk to them, they're fine with it. And by the way, I should say one of the misnomers is that national banks can't do this. Federal savings banks can't do this. Not true. The regulators, and we talk to a lot of them, are generally agnostic with respect to whether or not their banks can do it, so long as they do these things that we're talking about today, all the BSA, AML, all the risk management, et cetera. So let's assume you've passed the regulators, you've passed your correspondent banks, you've done your internal analysis. Now, how do you do it? So we have to talk about, you know, the one key guiding document for all of this, which is FinCEN's guidance from 2014. And what they basically say is you've got to, as you bring on these new customers, anyone in the BSA, AML world would expect this stuff. Verifying that they're licensed, reviewing their applications, obtaining information business about them and related parties, understanding what their normal level of activity is. And right now, I'm even working on for one of our clients, an intake form and an account agreement as to what that's gonna look like, and making sure they know up front that they're gonna have to provide us with a lot of information, maybe more than they would have expected, in order for us to be able to bank them. Next slide, please. And that customer due diligence and enhanced due diligence is not just at the initial phase, but it really needs to be ongoing. So monitoring publicly available information, monitor for other suspicious activity, and refreshing that information periodically. And again, they need to know, and this needs to be, the verbiage needs to be put in your account agreements to let them know that that expectation is not just at the initial phase, but ongoing. 2 more slides, please. And then 1 more, please, on suspicious activity reports. And so what FinCEN, sorry, back 1 more slide. What FinCEN said on suspicious activity reporting is that there's a special group of suspicious activity reports that, one more slide, Tony, please, that needs to, I'm on the one that says SARS on MRBs. And so what they said is we're gonna, because any of these accounts are engaged in inherently federally illegal activity, we're gonna create, there we go, special SARs that are based on them. There's gonna be marijuana limited SARs, are the SARs you file where none of those Memo priorities were implicated or otherwise violate state law. So basically, when you onboard a marijuana related business, you need to file a marijuana limited SAR. If in some way, shape, or form they implicate one of those marijuana priority issues that we talked about earlier, then you file one of these marijuana priority SARs. And if you terminate one of these marijuana related businesses, you've got to file a marijuana termination SAR. And actually, FinCEN comes periodically up with data with respect to these issues. So the marijuana limited SARs have been filed about 100,000 times, the marijuana priority about 10,000, and the marijuana termination about 30,000. And that compromises about 750 banks that have, or credit unions that have filed this information. So when you think about it, next time someone says, well, there aren't a lot of banks doing this, you know, there's probably out of the 5,000 banks in the country, and more than that on credit unions, you know, you have about 750 that are engaging in some degree with a marijuana related business. I'll leave it up to Tony and the other experts. You know, I would estimate around 100 or so, maybe 150 are doing it more significantly, but at least 750 have filed SARs on these issues that are doing it. Next slide. And so what are the red flags that FinCEN has come up with to determine whether to file one of these marijuana priorities? Basically, some of those things you would expect, that they receive more revenue than would be reasonably expected. There's more cash deposit that would be commensurate with the revenue, that they can't demonstrate that the revenue is coming from marijuana related sales, that there's rapid fund movements. Next slide, please. Deposits from third parties with no apparent connection to the account holder, that there's commingling of funds, the financial statements are somewhat inconsistent, you've got strange surges of activities by third parties. Next slide after that, no documentation to demonstrate that they have proper licensure, they try to conceal their involvement in marijuana-related businesses. We have seen that from time to time with our clients. You know, it's not every marijuana-related business that they come in like the guy I saw down in New Orleans dressed in a big marijuana green suit with leaves sticking out of them. You know, sometimes they try to hide their activities, and that's obviously one of the red flags. Negative customer diligence information, and whether or not there's any international or even interstate activity, because the concern is that funds are flowing from states where it is legal to places where it is illegal. The next slide talks about being located near a school or on federal property, or where the owner resides out of state in a way that would be impermissible. The slide that's called Indirect MRBs is the one that probably garners the most attention, because many of our clients ask very good questions around, well, what's the difference between a direct and an indirect marijuana-related business? And unfortunately, the regulators have not given very good guidance on this. There have been those in the private sector who've talked about tier 1, tier 2, and tier 3. In effect, they break out that indirect into tier 2 and tier 3. Tier 2 being, you know, closer to the plant selling industry, and tier 3 could even be companies like our law firm. You know, if we were to take on a cannabis-related business as a client. And so what this footnote 7 in the FinCEN guidance basically says is that to the extent it is one of those indirect businesses, in other words, it's not one of those licensed entities, but it's a service industry in some way, shape, or form, you treat those like you would any other business. And so you don't file those special SARs on them. And depending on how close they are to the marijuana-related business, you may even not need to do the full-blown enhanced due diligence on them. This is really where it becomes important at the account opening to get a good sense, not just of your new customers moving forward, but even try to get a sense of the customers you do have. Do they in some way, shape, or form touch a true direct, or some would call it a tier 1 marijuana-related business? And then you get into all sorts of questions around, what if the company has one kiosk in their store that sells gummies or something like that? And, you know, basically what I would say is the closer it looks like a true marijuana-related business, the more diligence you're going to want to have on it. And that goes for the example that's used in this footnote is when you have a client that leases, you know, a commercial landlord that leases property to a marijuana-related business. In that situation, it's not deemed to be a tier 1 true direct marijuana-related business. Although I would say that in your underwriting, and this is where it gets into credit administration underwriting and safety and soundness, that you would want to treat them as perhaps being of additional scrutiny. Next slide is enforcement actions, and we go one slide after that. We probably worked on the first enforcement action in the country of a bank that engaged in marijuana-related activities. And what we were told by the regulators is it had nothing to do with the fact that it was marijuana per se, and had everything to do with the fact that they basically didn't do all the risk management and BSA the way they should have, the way we've described here on this webinar. And so if you looked at this consent order, you wouldn't see the word marijuana in it. We try to make sure we got that out of there. And I think the regulators wanted that as well. So they weren't signaling that marijuana was inherently bad as having a customer, but making sure you do it right. And that means the right management team, the right staff, training everybody who's responsible for that function in it, having a good, strong written compliance program. I've seen a lot of these. Some of them are great. Some of them, frankly, not so great, depending on who writes them. And so it's really important to have a good team behind you, making sure you've got a good compliance program, you've got a good diligence program, and a suspicious activity report monitoring program. And again, this gets back to the strategic issue. You know, we had a client that said, after I gave this presentation, all right, you're the lawyer, should we do this or not? And I said, you know, if I gave you an answer, yes or no, you should fire me on the spot, because you really need to figure out if the juice is worth the squeeze, right? If you do all this compliance and making sure you do it right, what's it going to cost relative to what you're going to earn? And what does that mean if the law changes? And what does that mean in terms of how you price it? If you price it too low, you're not addressing your compliance costs. If you price it too high, and there's other choices out there, they're going to leave. So all those factors need to be taken into account. And I guess the point is making sure you do that, and especially knowing that a consent order or some other enforcement action is a possibility if you're not doing it right, that your strategic goals may be more important than any revenue you may earn from this. Next slide.
Hey, John, I think we're gonna, why don't we save a little bit of some of the comments you had for our Q&A portion. I know we've got Robin back on the line. We're gonna get back to Robin as soon as we hear from Deirdre. I'm sorry for some of our delays today. I'm guessing today is probably a record Zoom day with almost every school back in the country now, back to school, and a lot of them on Zoom. So I'm sure they're getting their workout over at Zoom today. So we're lucky today to have Deirdre O'Gorman with us from DX Consulting and Imperial Logistics. You know, John talked about a lot of the things that you need to consider from a risk management standpoint if you're going to enter this business. But once you make that leap, then there's a lot of work to do. And that's where Deirdre and her consulting and logistics firm come in. And so I thought it'd be great for her to share with us today some best practices that bankers need to consider when building out these programs. So Deirdre, I'll let you unmute yourself and then you'll be good to go. And I'll be happy to advance your slides since we have a little bit of a delay.
That would be great. Thank you, Tony. Thanks everyone for having me. So let's talk about some of the practical issues that everybody's going to need to consider when they jump into this space. So obviously we heard from John that insurance is an issue. So is your directors and officers policy covering you and your directors as you provide services to MRBs and hemp businesses? And the reason why I throw hemp in there as well is because we have some states that don't allow hemp, even under the 2018 Farm Act. So if product is going into those states, what is your liability, if any? And so we always just want to make sure that we're crossing our T's and dotting our I's when it comes to that protection policy for D&O coverage. And then as far as the deposit insurance for MRB deposits, I have not had a regulator put anything in writing for us that says, yes, they're definitely covered. No, they're definitely not. I think this gray area is actually okay, considering the time that we are in. If it was a hard no, I think that would be a nod to maybe not doing, offering financial services in this space. But the fact that it's a gray area, I think we can leverage that. But what kind of disclosures then do you need to provide to your customer base? And I think a lot of us that are outside of the banking world that haven't been in banking for a long time don't always understand what deposit insurance is exactly for. And so we need to make sure, especially with these MRB clients, that they get that if there's a seizure by the DEA or other some enforcement agency, those funds are not covered by any insurance provided by the financial institution. So I'm still seeing a delay, so apologize if we're on the next slide, but maybe you guys see it and I don't. So I'll just keep talking and we'll try to catch up. Next is board member education. So I know that we have definitely a lot of training to do in-house with your staff and with your leadership, but then I don't want everybody to forget about your board of directors because they're really guiding the financial institution's decisions as it relates to cannabis banking, providing oversight. And so a lot of times the standard BSA overview just doesn't cut it. So make sure that you get the board comfortable with the enhanced due diligence and the heavy lift that your financial institution is going to be doing in this space, so they really understand the compliance and what's at stake. Next, a lot of my financial institutions are surprised by this question, but we always like to cover what is your market approach? Are you going to be banking this industry yourself, or any parts of your program going to be outsourced? So there's lots of different solutions out there that are coming on the market that provide compliance solutions, that provide software solutions, that provide back office help, or act as a money service business, almost as an intermediator between you and the client. So if that's something that you want to do, what are the pros and cons or costs involved if you decide to outsource any or all of your program? And when I say all, that's with a really big asterisk, because we know that we can't separate ourselves from the BSA and AML responsibilities, that you still have to provide a lot of oversight. Next up are vendors. So I know that John covered the correspondent bank. Are they allowing you to be in this space? But then also what vendors work with your financial institution on a daily basis. A lot of times that we're seeing our core product works fine, but maybe some of our fraud monitoring just doesn't help us in this space, and we need to work with some customization, or we need to get an outside software provider to help us with the enhanced due diligence. Some other items that we're seeing is just the cost involved of retrofitting some of those legacy systems that you might have in place. Can you pull out reporting? Some of the legacy systems like Core that you have in place might be a little archaic. You're waiting for that contract to roll over so you can get something different. But in the meantime, you're sitting here trying to figure out how to pull your SARs out of the system or having to be creative. So just make sure before you jump into this space that you have a really in-depth conversation with your key software providers and legacy systems that you have to make sure that you don't have to spend a lot of money with the retrofit or spend a lot of time doing manual pulls. Next is understanding the industry. So this industry is evolving all the time and getting abreast of the nuances. Like for instance, right now, one of the latest and greatest things we're seeing are MSAs, managed service agreements, where you have the big players providing service agreements for the smaller players to get them economies of scale. So with that relationship, what kind of enhanced due diligence do you need to do? What considerations are you going to need to have as far as who has account control? And is there impermissible interest at play trying to take control of that license? Also issues of privacy and trade secrets. So we really find that this industry is very focused on their product being the best in the industry. So just making sure that your employees understand confidentiality. And then also that this is an evaporating product. So understanding good versus bad industry vendors and systems. So we understand that in Michigan, there's a POS system that's mandated through seed to sale, but there's also other systems that are in place that you guys need to get a familiarity with to make sure that there's no wrongdoing happening. Next slide. So let's talk about staffing impact. So how is your current compliance team equipped to take on the enhanced due diligence? That's one of the things that I find most fascinating is that how you approach risk right now for your financial institution is typically how you're going to approach risk for cannabis or hemp. And so if you guys are reviewing every single account and doing a lot of due diligence on your portfolio, are you going to have the capacity to get to the scale that you want to get in cannabis? And I'm not saying that you're not going to be doing enhanced due diligence on every client, but just understanding the process and how you approach BSA and AML today will really speak to how you can scale your program going forward. And then branches. Will your branches take cannabis cash? I know in Michigan, there's a lot of financial institutions that are allowing maybe one branch or maybe a night deposit to take on the cannabis cash, but it's a lot of money. So does your commercial liability policy, do your current levels for insurance cover the amount of cash that's going to be coming into your branch? And how does this impact your FTE at the branch? If they're busy, going through all of these MRB deposits, are they going to have the capacity to service other of your clients that are coming into the branch? And then John had covered the correspondent bank, just making sure that you have those conversations with key vendors so that if you do have to ship cash somewhere, who are you going to work with? The big three are not in cannabis today. So for courier solutions, there are other market opportunities that you would have to research and get approved with your correspondent bank. Other staff considerations, so HIPAA and privacy issues related to medical cannabis patients. So we're seeing payments come through, sometimes confidential information, especially on the medical side. So making sure that your team is comfortable with keeping that information confidential. Sometimes they don't even realize that they're looking at medical information. So just making sure that you cover that in your trainings. Exposure to the plant. So the money smells, but not as much as people say it does. So if you do have that coming into your location, just make sure that you understand the difference between a drug policy that you have in place for your staff and workforce impairment. So what's preventing them from actually doing their job? So for instance, with the enhanced due diligence, it requires on-site of these businesses. Now you can work with other third parties to do the on-site, but many times you as a financial institution wants to go out and make sure that you understand this business and meet key players. Well, guess what? Your employees are going to be coming back from those facilities smelling a lot like marijuana. And so we just don't want people to have any concern that they're going to get in trouble with your current drug policy issue. Next, product configuration. So with growing competition, especially in the state of Michigan, what products and services can you offer to get market share, but not necessarily compromise the service model or the scale that you're looking to provide in the industry? And we want to make sure that we're not creating some back office challenges as well with how you configure your product line. So you might want to have all these bells and whistles, but can you really do it with the configuration that you have in place today? a lot of times we're seeing this in the back office as it relates to ACH and wire. So I'll get to that in a minute. Then, as John mentioned, is lending a part of your scope. So with this one, really, the challenges come to collateral, right? We cannot, as financial institutions, take plants as collateral because we are not licensed to do so in the state of Michigan. So what can we do instead of that? What other collateral can we take just in case we need to cover or hedge our bets? And the other thing to consider is if there is a seizure, typically it's going to come from the DEA. If it's the IRS, it's basically get in line with the lien, right? So if we're first before anybody else, then we'll get our fair share. But if it's the DEA, then it's really the onus is on the financial institution to be able to show that the money that was made for the payments of those loans or the purchase of a building was not made with proceeds from cannabis, to really get those freezes removed. So things like that you need to put into your term sheets and any documentation that you have for the lending side. And that kind of covers the commercial piece, but then how to price, right? You might have all of your term sheets ready. You might be able to lend in the space, but without reliable RMA data, how do you price for risk? So that's something that you guys need to consider before jumping into the commercial lending side. On the mortgage side or on the consumer lending side, you might have to do some stress testing on your portfolio to make sure that if you can keep these loans on your books, because Fannie and Freddie, it's still up in the air if you can sell these loans. So some considerations there. And then last on this list is how do you approach payments? So many of these MRBs are being bombarded with different payment solutions, right? So you have in-house payments, ACH and wires. They all want to do ACH, they all want to do wires, but international wires, that's typically not permissible, especially with a correspondent bank or through the Fed today. So making sure that you understand the constraints there. And then externally, are you going to allow them to deal in cash only? Are they allowed to use closed loop systems, crypto solutions, ATMs on site, kiosks? All those things should be a part of your business plan and your market approach. Next slide. Now let's talk about hemp real quick while we pivot. So for hemp, we have the enhanced due diligence figured out for cannabis, but hemp I think is still a little bit the Wild West. And so if you had to ask me as a consultant what I would prefer, we can definitely help all of our financial institutions with hemp we have before, but I personally think that cannabis is a little easier, to be frank. So with hemp, we have the FinCEN due diligence that says, yes, you can bank hemp, but you have to follow these rules. You might not have to file as many SARs, but if they break the rules, then you do. And the other thing to consider is a lot of these cannabis businesses are getting into hemp. So on one side of the fence, they're on cannabis, the other side, they're on hemp. So what are you going to do as a financial institution? Do you need to have a backup policy for what to do enhanced due diligence wise on the owners? And then on the validation of the, and I don't know, Tony, if you already advanced it, but.
I did. There's a little bit of a delay.
Okay, no worries. So for the validation, can you track the hemp seed to the seed chain of custody to ensure it was hemp and not marijuana? So we do have some of the strains that are a little more volatile than others. And so even if you get that hemp seed chain of custody, during the growing process, the strains that are a little more volatile could actually spike and become cannabis instead of hemp. And there's a whole provision that the USDA has provided to what to do when there are hot spikes, but are you as a financial institution prepared for that? Crop insurance, so right now there is not crop insurance on hemp. So I would recommend no ag lending on this product yet. So just make sure that you understand that the rules are still being written and that your policies and procedures need to evolve with that. Interstate commerce. So as I mentioned previously, some states have not gotten their 2018 farm bills basically enacted with the USDA. They haven't gotten them approved. So many of them have defaulted to working under the 2014 Farm Bill. And because of that, interstate commerce and transport interstate becomes really complicated. And then you add another wrinkle that you have some states that don't allow hemp at all, then you really need to work with your hemp farmer, as well as kind of understanding where that product is going to go, what shipping looks like, and what you can do as a financial institution to prevent risk. The other interesting wrinkle is, do you have a testing facility in your area? And does the testing site require that business to cross state lines? So as I mentioned, that hemp product can turn into cannabis because there's THC could concentrate or spike and be over that legal limit. And with testing facilities being limited, many states that are under the 2014 Farm Bill have a local area a testing facility that can test that product. But under the USDA mandate, it is actually certain testing sites that are controlled by the DEA. And there are not many of those sites around the US, so it might require the hemp product crossing state lines. And if it's hot, it could be cannabis. So again, just making sure that you understand all of the ins and outs of this product. And CBD, we had in the last almost 2 weeks ago, the DEA talk about CBD. We're still waiting on further guidance from the FDA, but can CBD cross state lines or international boundaries? And what, if any, liability lies with the financial institution if you facilitate that payment? So lots of questions and considerations that you can work on with a law firm or with a consulting company to try to help you parse out some of these more detailed questions that you need to ask before you launch into a program.
Deirdre, thank you so much for that overview. Robin, let's switch back over to you, and then we'll get to our panel discussion. Robin, while you unmute yourself, you left us off right at the point where you're talking about the licenses that had been rolled out for this year, and a little bit of the delay, but kind of what you're seeing now as we move into the fall.
Sure. So we saw just a little bit of a lull when the stay-home order happened and construction was briefly halted. We did see that slow down some of our build-outs and licensing just because they weren't able to move forward with their construction projects. Of course, in July, we saw a drastic jump and kind of made up for some of that. And so we're back on a good trajectory, but it didn't affect any of our sales during that time. So we'll just jump to the next slide. The state of Michigan actually commissioned a study through Michigan State University, and I know like the Michigan Fiscal Agency had said something about $2 billion in revenue. According to MSU's study, we're actually looking at about $3 billion in annual revenue towards the end of fiscal year 2021. So as you can see, we actually have quite a bit more growth to look forward to, and plenty of market share to get more banks on board. So just a couple other things that I'd like to touch on. We're committed to ensuring that our members have access to banking statewide. And so there's still some regional issues. We have members in the UP, Northern Michigan, especially the northeast side of the Lower Peninsula. They have very little access to banking there. And one of the things I'll say is that as far as the number of institutions, we're right on track with Colorado as far as how many banks we have, but Michigan is so much larger than Colorado. We are having regional banking issues. So what that has turned into, and I have owners that call me every night while they're on their, hour-long drive to the bank with, to make deposits. And so what we want to do is have a regionally safer scenario where the owners themselves are not having to drive cash to the bank every night, that it's a shorter distance for them to where it would be affordable to set up shuttles and things like that. And so we want to reduce the amount of driving to the bank with cash. And so the more institutions that we get participating, the safer it'll be for our members, which is very important to us. Also, we're going to continue to lobby for the Safe Banking Act to expand protections for the banking. In fact, that's how I met Tony here. I was on a trip lobbying in support of the Safe Banking Act in Washington, D.C., and learned that he had this amazing software, and Tony has been pivotal as far as helping us get access to banking in Michigan. So Tony, I really appreciate you and everything that Shield's done for our members. And so one of the things that we did last year was we partnered with the Michigan Bankers Association. We held a joint press conference. We got one of our state reps to introduce a resolution in support of the Safe Banking Act, which passed unanimously. And it was really nice to see the cannabis industry working in conjunction with Michigan Bankers Association. And I think an opportunity for everyone to see that our members break all the stereotypes. They are legitimate business people. They want to be transparent. They want to be in compliant with state and federal laws. And so one of the words that I use when I'm talking about banking is transparency and how important that is to our members. The last thing they want is to suddenly have their account shut down. And one of the things that recently came up from our members is a serious need for their employees to have transparent banking relationships as well. And so we're starting to see employees and thousands of employees who need transparent access to banking, who are having their account shut down when the banks find out that they actually just work for a licensed facility. To take that a step further, one of our goals to tackle, hopefully by the end of this year, is figuring out how those employees can get mortgages for homes. So there's also a housing issue in certain areas of the state, especially areas that like northern Michigan that are seasonal. It's, they can maybe find somewhere to rent 9 months out of the year. The rest of the year, they're kind of in transient as they're trying to get housing. So some lending options for employees is something that we're certainly looking into. But overall, I would say that, as I've demonstrated with the numbers, 7 million monthly in revenue to 60 million monthly in revenue just in the first year. Pretty amazing. And so I see that going all the way to 3 billion a year in revenue. And so I think there's plenty of room for more banks. Thank you, Tony.
Well, Robin, thank you. And thank you, Deirdre and John. Let's jump into some questions now. All of you mentioned some sort of federal recognition of what's going on at the state level, whether that's the MORE Act, the SAFE Act, States Act. I guess the big question, at some point, one of those or some version of those will pass. But what does that really mean to the cannabis industry? And then also, what does it mean to the bankers in terms of their BSA, AML responsibilities? And John and Deirdre, maybe I'll start with you. A lot of bankers say, well, I'll get into this when one of those passes because it'll be a lot easier. Is it going to be easier?
I'll give you a lawyer answer, yes and no. It's going to be easier from the perspective of you will not have to worry about some of the federal criminal angles, and that's what those acts are doing, except for the MORE Act. But if it's the SAFE Act or the States Act, your primary focus on what sort of issues you need to be cognizant of, because even if it becomes totally legal, marijuana, I believe, is still going to be treated by the regulators, and I believe still should be treated by the banks as if it were a higher risk industry. Eventually, I think that stigma will go away, but for the time being, it's going to be a higher risk industry. And if you are the kind of bank who does higher risk industries well, I think you're going to support them well. But by the same token, I think banks who have had some BSA issues, have had some management issues in the past, don't have risk management as a high priority, those banks, I think, should stay away from engaging in marijuana-related business to any great extent. Because again, some of the regulatory hurdles and regulatory challenges I think you're going to find are going to subsume all of the potential benefits of being involved with it.
Deirdre, what's your take on that?
I agree. I think that the enhanced due diligence isn't going to go away. But I do encourage financial institutions, if you're going to make a decision, I would highly recommend to make it sooner rather than later. I've been in this industry now for the last 6 years. And when we first got into it on the consulting side, as well as on the Imperial Logistics cash transport side, the financial institutions were about 300 million to 500 million. They were servicing a handful of accounts, maybe got to 100. Then it started to pivot to about $1 billion in assets, servicing the industry. And now we're starting to see some super regionals get into the space. So 10 billion plus in assets. We even have a few that are 50 billion in assets. that are national banks jumping into the space. So if you're interested in getting into cannabis, I would recommend you do it before some of these bigger players get into it and start solidifying your customer relationships now, because we all know that you can provide great customer service, but let's just make sure that you have those relationships in place now before there's a lot more market competition.
Yeah, I think we at Shield, we share your opinion, both John and Deirdre. One is that you've still got a product that has certain inherent risks, right? It can easily move from the legal market to the illicit market, and we'll continue to have state-by-state differences in legalization, which may encourage that. And you also have a business that inherently has a lot of legacy funds, and those funds still want to find their way into the legal banking system, and banks are going to need to guard against that for a period of time. I think, Deirdre, you made a really good point about who's getting in next and trying to get your first mover advantage. The other thing we look at is building a risk management platform within your financial institution that can adjust to pricing changes in the market as they occur. There's some pretty good premiums today in terms of service charges that you can earn and the non-interest income that your bank can bring in that more than cover your cost of the enhanced due diligence. With more competition, are you building an operational back office that will allow you to sharpen your pencil and still be profitable? And so continuing to look at that. Robin, I know you've lobbied on behalf of the National Cannabis Industry Association for access to banking, which often comes down to SAFE Act or States Act, MORE Act. What are you hoping for the industry if one of those passes? What do you expect will change?
Well, ultimately, we're hoping for traditional lending, and obviously over time, our banking fees going down. And that's one thing, when we first started forming banking relationships, a lot of people in our industry didn't understand why they were paying so much to have the accounts. And I served as kind of the in-between of explaining, we're talking about banks, setting up reporting departments and becoming federally compliant, which takes money. And so, the responsible thing to do in this situation is to pay the extra fees and know that you're covered. And so it took some education on my part, just to get the licensees comfortable with, understanding that what they were paying for and how important it was to protect their business. And I think moving forward, one of the things we're still struggling with is lending. In fact, I was recently doing a Michigan radio interview where they said, what do we have to look forward to next year? And I said, well, we can look forward to, social consumption lounges, which are a license similar to bars. We can look forward to cannabis events, which are licensed events that are similar to Beer Fest. And he said, well, how are we going to do that? If we don't have a vaccine ready to go, I can't imagine the banks are going to lend to any of those types of businesses because of the liability. And I said, well, honestly, they're not lending now, so I guess we're privately funded, right, to do those activities. But, ultimately that has created a barrier to entry for social equity applicants, for, people, average citizens that just want to get their foot in the door. And so you really have to have big money, deep pockets. And so that's part of the reason why we're hearing about a social equity movement combined with cannabis, is because there's just not any traditional lending. So we're hopeful that we'll make some progress there.
Well, let's jump into that question, John and Deirdre. Lending seems to be increasing in conversations, at least with bankers. If for no other reason, the need for new sources of earning assets sort of now as COVID continues to advance and become a reality for us. But beyond maybe the desire to find that earning asset, what are some of the things that bankers need to consider before they begin jumping into lending this industry? And what does the industry need to do, maybe helpful for Robin's members? What would be helpful for the bankers if the industry was willing to do?
Yeah, and we've started to see over the last few months the lending side questions come up more and more often. And what I talk to them about is you really need to put on both your BSA AML thinking cap and your credit administration thinking cap, because it really combines both elements. And so you first have to do all of the things we talked about today on BSA AML with respect to a customer. And then you need to think, okay, what are the additional risks of us not getting repaid? Now we have a safety and soundness issue to worry about. Until it becomes legal on the federal side, what's the risk of that collateral going away? What do the loan agreements need to say in terms of being re-engineered in an era when marijuana-related business or its assets in some way, shape, or form are collateral? We're seeing companies that have affiliated companies talk about providing some other kind of collateral that is more attenuated from the actual marijuana-related activity as collateral to put some distance between that and the industry. So I think that there's a lot of creativity and a lot of energy being spawned around workarounds or around other ways to decrease the risk. But at the end of the day, it really is going to need a whole of bank approach as banks decide if they're ready on the deposit side, if they want to migrate over to the lending side, and how much more serious that becomes for the institution.
So Deirdre, often, I know some of the banks you've worked with and sort of that crawl, walk, run approach. What's the lending version of that? And then maybe to follow on to what John was saying, I know a number of the bankers are starting to see factoring companies enter the equation, financing some of those receivables on the wholesale side. Maybe you can kind of provide some color on both of those topics for us.
Yeah, I definitely think that we're seeing the industry start to rise up and provide their own solutions where the financial institutions have been unable. So we're seeing, I think that's kind of one of the impetus for those MSA agreements that I had mentioned earlier, that you have the big players that are willing to lend money to the smaller players if they get first right of refusal on their licensure, things of that sort that are taking place within the industry. So then we've had some of our clients now stand up and say, okay, I'll start doing equipment lending, or I'll start doing, some small financing on buildings that were possessed prior to, the licensure. Maybe it was bought by a real estate holding company or whatnot. So they'll do real estate, they'll do equipment financing, but beyond that, anything more creative, not so much. The factoring is a new wrinkle that we're seeing in the industry, for the industry, by the industry. And so financial institutions have to be very aware of how these factoring relationships work, because there's typically the documentation is very geared towards the lender and not protecting the financial institution. So I always encourage all of our financial institution clients to get into the middle of those conversations and make sure, don't just sign away those DACA agreements, get your interests as part of those terms, because there's some things that they're not considering, lien issues, indemnification, other issues for operational capacity for the financial institution, reporting, things that you guys really need to get into the middle of and have your voice heard. Kind of in that same vein, I would recommend lobbying. Some states the financial institutions are speaking to their regulators, their legislatures. They're trying to get other ways to manage these issues so that they can lend. So for instance, is there an escrow solution that maybe they can lend on the plant? They can't necessarily take the plant as owners, but they could have somebody lined up that will be in the industry that would take it in case this individual goes under. Are there bankruptcy protections that can be put into place so that the financial institution is covered? Those things are really important for the industry. And as a lobbying effort, I encourage everybody to start using, dialing for dollars, if you will, start calling your legislators and your regulators about these issues.
That's a really good point, Deirdre. I think the other thing to think about on receivables financing that we're finding for our bankers is it's causing timing issues on cash flow for the actual operator themselves. And so when you're really trying to understand as the bank, the money that's coming into your financial institution and what time period those dollars are connected to, there's additional work created for you in your due diligence in really linking those deposits that you're receiving to sales that may have been made in prior periods. And so that's where your BSA AML solutions can help you to manage those timing differences. We have an audience question that came in, I'll throw out here. And so without, this is a fee question, but so we won't talk specifically about fees that are being charged by any of the financial institutions. But the question here is, how are banks structuring fees for MRB deposit customers? And do you see banks charging upfront onboarding fees? Deirdre or Robin, do you want to provide a little bit of color on what
Sure,
you're
I can do
seeing?
that. I think on the higher end, I've heard from our members, the feedback I get is as high as $3,500 for an onboarding fee. And then in some cases, they do a percentage as far as how much is deposited. And then in other cases, they're doing flat monthly fees. So the banks that we work with, you know, a lot of times when a member reaches out and asks me for advice on which bank to go to, I always suggest that, you know, I connect them with multiple different banks and say, you know, it's really going to be dependent on the size and scope of your operation and how much money we're talking about depositing. And so what bank might fit best for one of our members might not be the best for the next one.
And Deirdre, are you typically seeing, whether it's in Michigan or across the country, some sort of underwriting or upfront fee? Not typical with deposit taking, but typical with this, this portfolio?
We are. So most financial institutions will do that application or onboarding fee to cover their costs for the enhanced due diligence. So background checks, you know, what we're seeing in a lot of states is they're extraordinarily busy. So the financial institutions that are relying on the state to do a lot of that heavy lift on the enhanced due diligence on the owners or other beneficial owners of the business, it's just not happening, or they're not going into the businesses readily because they're just backlogged with trying to get into those facilities and do due diligence. So a lot of the financial institutions will trust but verify, right? They're going to be doing their own heavy lift as it relates to those things. So they have to cover their costs. So an application fee is pretty standard, and then a monthly fee. Like Tony had alluded to though prior is I think it's very important to be nimble with your product line, because you want to make sure that you can cover your costs. But the times they are changing, and as more competition comes into the market, we're seeing in some areas, not in Michigan, where some cost-cutting financial institutions will just come in and lowball all of the existing financial institutions to get market share, and then they change their fees downstream. So just be aware that those tactics are already starting in the industry. Thankfully, they're not in Michigan yet, but just make sure that you're nimble enough to be able to change your fee structure to be able to respond to market needs.
That's great feedback. Thank you. You know, Robin, early on, you talked about the sales growth that you've had in Michigan, and it's been significant. But I know early on you got some even national press for some supply chain issues that you had there within the state. What does that look like today? And is that still an issue for the industry?
It is. It is. In fact, you know, 8 o'clock this morning, I was getting phone calls from retailers, you know, begging me to help them find product, which is, by the way, not in my job description at all. And so, but I do. I hear every day from the retailers. They're looking for more supply, you know, more products, more variety, better price per pound. And so, you know, that's pretty typical at the beginning of any state to have supply and demand issues. As the grows are working to keep up with the demand, and, you know, honestly, with recreational cannabis, the demand is absolutely skyrocketing, and the growers are keeping up just as fast as they possibly can, which is why it's a good thing that we don't have limitations or caps on the number of licenses, because we have plenty of more need for that product. So I would say that the supply and demand issues are not as bad as what we were experiencing a year ago, or even, you know, 9 months ago. But so we are making some progress, but we need more product.
Sounds good. You know, John and Deirdre, there's a lot of surprises for bankers when they start thinking about this market, but also a lot of misconceptions to overcome. Maybe you can think of some of the clients you've worked with, or some of those misconceptions that you've had to quell those for boards or management teams. John, I think you mentioned one earlier, which was just charter type and what we're seeing there, but maybe you can provide a little bit more color.
Yeah, sure. I've done a lot of board training on this, and you can imagine I've had every question under the sun. And some of those involve, yes, if we're a national bank, I thought we can't touch this. The answer is no. The OCC has told me, both with respect to national banks and federal thrifts, that they are agnostic on it so long as you do it right. So that's one myth. The other myth, I guess, is one we alluded to earlier, that, well, if you say the regulators are agnostic and we can do it, that means all banks can do it. And the answer, again, hopefully you've seen the case, the answer is no. You need to have the right risk architecture surrounding this. Another one is, well, since so few banks are doing this, well, we showed you from FinCEN guidance that about 750 banks have touched this. That means we can charge whatever we want to charge. And again, the answer is no, because both now competition is increasing. And if one of those three acts that we talked about passes, you're going to have a lot more competition that is going to pick away some of your clients if you've been treating them badly. And that makes even more reason that when you think about that price point, and we have regulators who say you should charge enough. But be careful about charging too much, and be careful that you're talking to your clients about, here's why we need to charge this. We're not gouging you. These are legitimate compliance and risk costs that we need to recoup. So those are a few of them. I'll defer to Deirdre or anyone else if they have some others that are their favorites.
And Deirdre, how about you? Have a myth bust something for us?
Yeah, I think a lot of financial institutions that might be in other high-risk areas like MSBs or high-risk payments think that they can go into cannabis and it's a ready-made program. But I'd like to just caution that cannabis is an evaporating plant. And so the nuances and how they've structured themselves is very different. The other issue that I know the panelists have kind of alluded to, but we haven't spoken about yet, is 280E. So the tax implications for these businesses is much greater than the standard entrepreneur. They're not allowed to take a lot of the same deductions that a standard entrepreneur is allowed to take. And as such, they've responded by creating basically a quagmire of EINs that do different services. I have a EIN for marketing, so I can use those tax incentives. I have an EIN for real estate or a holding company. And so, 10, 15, 20 different EINs are working within an umbrella of the same business. And so the financial institution typically just is not ready for that kind of onslaught of different compliance and rules and regulations as it relates to these interconnected businesses that are all basically owned by most of the same entity groups.
Tony, one other one is, just because we've seen not a lot of federal activity with respect to law enforcement, that some banks feel as if they can let their guard down. And what I would point them to is there have been some civil RICO suits that have been filed across the country against banks for providing businesses to cannabis-related businesses. The good news is, for the most part, the judges so far basically said, banks, if you comport with the Cole Memo and the FinCEN guidance, you shouldn't be part of this lawsuit. But that doesn't mean you might not be targeted, at least in the beginning, as part of those lawsuits. And we haven't seen the appellate processes of those lawsuits move forward. So civil RICO remains a possibility of a risk. So does federal law enforcement. Like I always tell people, the risk is not zero. It just means that if you look at Cole Memo, said we probably won't come after you for these things. So that's another myth that everyone should be aware of.
Deirdre, you kind of alluded to it in your prepared remarks that a lot of the payment mechanisms, there's definitely cash. It's a big part of this industry. Customers are using ACH and wires with obviously some responsible restrictions in there, but we are also seeing sort of a network of alternative payments to fill in the gap that Visa and MasterCard have left. From the bank's perspective, as they're receiving deposits from those payment companies on behalf of their merchant, what should they be considering, and how proactive should they be in understanding those payment vehicles that the customers are adopting at point of sale?
Great question. I think that all of the different solutions out there are so nuanced that it's hard to pin down one thing versus another. But some of the questions that I typically ask are, what rails are they running on? And if at any point they're running on a Visa or MasterCard rail, run the other direction. Try to shut that down as fast as possible. The other thing I always look at is, where does settlement take place? Is the financial institution that's doing settlement, are they comfortable with cannabis? Are they regulated, and are they doing the enhanced due diligence that they need to do, or is it settling offshore? Furthermore, we're seeing a lot of these fly-by-night groups settle in other countries. And so the delays in payments or the issues or the rules around cannabis banking are very different in those countries. And so just making sure that you understand the vendor relationships that the MRBs are working with, specifically the payment side, is really important, and clamp down whenever possible if you see something that isn't copacetic and isn't in line with the rest of your culture of compliance.
And Tony, one thing I'd add to that is we're working with banks who are partnering up with some of these companies. And one key thing, in addition to your normal vendor due diligence, and a lot of these companies, would be deemed to be fintechs, right? And so the FDIC came out with some good fintech guidance in February, actually directed towards fintechs, to let fintechs know what kind of diligence banks would be expecting when they partner up. And they include things, if you're on the banking side, making sure these fintechs have the right licensure, because depending on how you structure the program, they may need to be licensed either through FinCEN as a money service business or in the various states as money transmitters, and making sure that you have a firm understanding, both from your perspective and from that entity's perspective, that they are giving you, the proper reps and warranties, that they have the proper licensure at their end as well.
Yeah, I think that's really good advice, John. And I know from the folks that we talk to, there's a lot of fatigue in the payments area. There's a lot of whack-a-mole going on. So you might have a payment solution for a month or two, and then it's taken down, and that's creates a lot of disruption at the business. And Deirdre, to your point about the offshore clearing, I mean, it wasn't that long ago, we know of a company on the West Coast that ended up with a lot of their customers' funds held outside of the country. Last I checked, a lot of those funds are still outside the country and not back to those businesses. And so quite a bit of business risk for those MRBs that face a lot of additional business risk just because of taxation and the nature of their business. So good advice from both of you on the payment side. We have a question from the audience. One of them was, it's on on-site visits. How often should we be out visiting our MRBs and doing our official on-site visit of their facilities? Deirdre, do you have some best practices in that area?
Yeah, so for our company that does the on-site audits, we typically, most of our financial institutions require an initial on-site visit, so doing the audit prior to approving the account, and then at least annually, depending upon how that business is performing under your compliance. So that makes two, essentially annually, but again, that's really up to the financial institution and your comfort level. Personally, I would like to go visit every quarter, not necessarily doing the full on-site audit necessarily, but just checking in, making sure that nothing has changed. These business owners might not realize, because they're so busy, that something has changed, or they've added a licensure, or they're going to add a product line, and they fail to tell you, not because they're trying to hide something, but just because they're busy. Sometimes things fall through the cracks. So it's always good to just touch base with them, even if it's by phone, to make sure that you understand their business plan and how fast they're moving and how you can work with them, but also maintain your compliance.
One thing I'd caution on those on-site visits is the oh wow effect, which is the banker goes out and, oh wow, there's a lot of weed. And instead you have to have a plan when you go out for those on-site visits. What exactly are you looking for? What kinds of things do you want to understand better about the business, or validate about what they told you as part of their application or their ongoing bank relationship? And so folks like Deirdre can help you with making sure you move past the oh wow part of the tour and to the getting meaningful data that helps you manage risk. I think we've seen those oh wow visits a little too often sometimes out in the field. So good advice.
And hopefully you don't get an oh wow, we forgot to put that in the terms and conditions of our account agreement. So making sure you have that up front.
And I'll tell you from personal experience, don't go wearing your best suit for the cannabis tour. There's a lot of questions from your dry cleaner. Well, as we wrap up today, first, a big thank you to the Michigan bankers for all your time. But one of the things, and Robin alluded to it earlier, the Michigan bankers have been incredible in terms of the speed at which they're providing access to banking. But as Robin clearly outlined, and I'll let her share a little bit more about some of her outlook on the industry in the months and years to come, there's opportunity for more banking to cover the unique geography of Michigan and to make sure there's access not only for the entities themselves, but for a growing number of people that work for these entities across the state. And so John and Deirdre, thank you so much for your time and expertise. Robin, I thought maybe you could leave us today with just some high-level thoughts on what you're hoping to see for the industry in the next months and years ahead.
Sure. I'm hoping to see continued regional growth as far as our banking relationships are concerned. I'm always happy to speak with banks or bank boards. I've on a number of occasions gone in and spoken with bank boards as they're trying to work to make their decision. So I'm always happy to have those kinds of relationships. I've also on several occasions been able to find members who are regionally in an area close to a bank where we can maybe do kind of a trial banking relationship and just see how it goes. A number of our members have participated in those, knowing that they might not the bank might not decide to move forward, but are willing to, form the relationship and see how it goes. And so, we're always happy to participate in that, happy to, guide our members and really any licensee that calls us as to pointing them in the right direction and getting them a banking relationship. So we're hoping to see more up north in the UP, northeast side of the state, as far as regionally, but then also, getting all of our employees healthy banking relationships that are transparent so that they don't have to, be on a family vacation and find out that their debit card isn't working. We want to take good care of our employees as well. And so other than that, I would say, we're looking forward to much more industry growth, new license types being issued, all different size grows. Before I got on this call with all of you, I was on the phone with one of our members who's getting ready to open the state's first social consumption lounge. And we were obviously discussing issues from transportation to community outreach to how to do this safely during a pandemic, what the restrictions should be and a slow, thoughtful rollout. So I think we're going to see a lot of new types of businesses moving forward next year. And very excited about that. Of course, that brings up all kinds of, we have a lot of great relationships with insurance companies. And so a lot of times I work to make those introductions as well as we're rolling out new business types and understanding we're going to need certain kinds of liability insurance. We're also working on some group insurance, health coverage for employees and such. So, it's not just the banking industry, it's everything from accounting to software, to different types of technology to healthcare that we help our members. And so we're going to continue working on that and excited to see the industry reach $3 billion in annual sales.
Thank you, Robin. And Stephanie, I will turn it back over to you. And thanks again for having us today.
Thank you, Tony, Deidre, Robin, John, appreciate it. Thanks everyone for attending. I will send out a PDF of the presentation along with the recording link, but special thank you to Shield Compliance as well. Appreciate all your content and knowledge today shared with our membership.
Thank you. Thanks. Have a great day. We'll talk to you later.
Thank you, everybody.
Thank you.